now it's turn of Mr. Miko Matsumura.
Okay, great. Excellent.
Thank you very much. Thank you very much for coming Istanbul. I hope you like our city. Can you please introduce yourself a little bit?
Yes. Okay, my name is Miko, and I've been 30 years in California, in Silicon Valley. I've been involved with open source software since the beginning of the Java programming language. So I was part of the original team for Java, and this was a long time ago, more than 25 years ago. So, you know, I'm 50 years old now, and I've been involved in open source software, and now I'm getting involved in open source money. I'm a founder of a cryptocurrency exchange called Evercoin, and I'm also a general partner with a venture fund in Japan called Gumi Cryptos.
Actually, in that sense, we have a very similar background. I used to be a Java developer and worked in some open source projects as well. Now I'm in MenaPay as marketing.
Great.
Is this your first visit to Istanbul? What's your opinion about the city?
So this is my second time in Istanbul, and it is an amazing place. I really want to learn more. When I come here, I really want to learn more history because it's just very deep. Like the history here is so deep and so layered. I feel like there are periods of history where I feel like I know what's happening, and there's long periods where I feel like I don't know much. I don't know enough. Like,
have you seen the old city, by the way?
Yes, I've been. I've been to the Blue Mosque. I've been to some amazing places.
Cool. So as you know, we are targeting Middle East region, where more than 400 million people lives. Did you visit any other city in the region?
Yes, I've been to Dubai. Of course, it's very dynamic and exciting place. So I feel like you know, I've just scratched the surface.
Cool. You're a serial entrepreneur, investor, and blockchain evangelist. What are you doing lately in blockchain world?
So my passion project is my exchange called Evercoin, and I think to me, exchange right now is deeply broken. And I think that, in a way, I want to solve this problem. I think at the moment, the exchange business is dominated by the Chinese model, which is a centralized custodial exchange. And it's a very aggressive model that involves basically controlling user funds, right? So all the users give up their power, and it's very centralized. So in a way, I think the model for exchange is so broken because cryptocurrency is decentralized and the exchanges are so centralized. So I think for me, Evercoin is probably one of the first truly, it's not, I would not call it a decentralized exchange, but it's an exchange where the user controls their assets. So it's a non-custodial exchange. So very passionate about it.
Yeah, I can see your excitement. Could you share the actual status of blockchain world, startups, technologies developed, and funds raised during token sale events?
Yes. So I'm just going to stand because
Sure.
I'm excited about this topic.
Okay.
So you can either, it's up to you.
Okay.
It's up to you. If you want to stand too, that's good. So this space is in an amazing place right now, right? Because it's in a bear market, right? And what we don't know, I'm not a specialist in market timing, right? So we in a market are in a winter. So we don't know if this is a normal winter. We don't know if it is a nuclear winter. We don't know if it's an ice age, right? But the thing that's amazing about this market is it is a builder's market. It's a builder's market. So really, people who are building and deploying solutions actually have all the power. And I think we've moved past the point of speculation. Now, the fascinating thing is that the market has overcorrected. And the reason it's overcorrected is that promises have been made and not kept. And that's really that there's some reduction of trust in the crypto economy, right? So if you go back to the first white papers, go back to Bitcoin. Bitcoin white paper promised peer-to-peer electronic cash, right? Do we have a peer-to-peer electronic cash? We do not, right? So even the Bitcoin white paper has not delivered on the original promise, right? The Ethereum white paper promised a world computer. So do we have a world computer? We do not have a world computer, right? But the good news is that the market has overcorrected. And the reason the market has overcorrected is that they don't understand that there is a foundational innovation, right, in blockchain technology, right? So we don't have a world computer in Ethereum. But what we do have is we essentially have a global vending machine for novel financial instruments. And this vending machine has vended over 20 billion USD worth of these novel financial instruments, right? So this, in fact, is an incredibly powerful engine. And in my history in Silicon Valley, I have learned, first of all, if my thesis is not broken, then I should not sell. So for me, my original thesis is what I call open source money, and that thesis is intact. So the second thing that I think is important to understand is that we didn't get an open source peer-to-peer cash. But what we have in Bitcoin is a completely trusted system that is a censorship-resistant store and transport system for value. So the thing that's amazing about the overcorrection in the market is people are behaving as if we don't have fundamental value when we do, right? So to me, fundamental value means delivery of products. And when you deliver products, you can actually add value to human life. And we already have done so. So I feel like as an industry, we're in a period of overcorrection. And so, for example, my venture fund continues to deploy capital, but we're deploying it in a measured pace because we don't really have a sense of the market timing, right? Because what will happen, for sure, is that out of this period, there will be giant companies that will emerge. And these giant companies, I mean, if you remember .com, we ended up with Google, Microsoft, Netflix, Amazon, Apple, giant companies. And we will, again, see giants coming out from this as well. So I think that's where we are as an industry. So, I think that's probably my best way of framing, where we are. Thank you.
Okay, you just mentioned this open source money, and previously I've heard many times you're mentioning open source software, how changed the software business.
Yes.
And now you say that open source money will change everything. Do you think that open source money will eat the entire world?
So 10 years ago, the internet started printing money, right? This is a foundational event in human history, actually, right? Because in a way, up till that point, proprietary suppliers of money monopolized the supply of money, right? So if you study open source software, you learn that over time, open source software becomes 90% of software. Mm-hmm. The thing to not misunderstand is if you study open source and proprietary software, the vendors of proprietary software today are worth more in market capitalization than ever, than at any period of time in history. So if you study the source code of Facebook, 90% of the source code is open source software, right? So it's been completely commoditized and hollowed out. However, it does not mean that the proprietary providers have lost their value. In fact, they're even bigger and more valuable, right? So if you follow this thesis with open source money, then what we should expect is we should expect that government-backed currencies will essentially be more valuable than ever in human history, but that 90% of the functions of money are supplied by open source money. And the idea of government-issued money, it becomes almost strange in a mobile internet era. Like if you go into the United States and you try to spend a Canadian dollar, you'll get dirty looks. And you'll never spend this Canadian dollar. Like, it's impossible, right? If you go to the internet and you send an email, like, you know, can you spend a Canadian email into an American email address? Like, that question doesn't even make sense. Like, there's just one email, right? So if the internet prints money, there should just be one money. And of course that's going to exist. Like, everyone in the room has to agree that of course this will exist, right? I mean, there's no way this will not exist. So the question then becomes, what form will it take?
So with this similar principle, we are also aiming to create cashless society in Middle East region.
Yes.
What's your opinion about this?
I think it's a vitally important region, and I think that it is a gateway to a much larger footprint, right? So when you talk about the cultural footprint, it goes far beyond just the region, right? So you have extremely large countries like Indonesia, right? Smaller countries like Malaysia, and then you have countries in not even North Africa, but you have countries like Nigeria, which will end up being larger than the United States. So I mean, I think the thing that happens as you expand the footprint and the vision is you access probably one of the largest populations on the planet. So I think it's a very meaningful entry point.
Thank you. And also, I remember you mentioned several times in your interviews before that creating a working fiat economy is quite important factor in order to create a blockchain-based project. Our co-founders has established multiple successful payment businesses in Middle East region. So MenaPay idea was built based on this experience and market know-how. Do you think that it's essential to have such experience while building a blockchain-based payment system?
Well, what I can tell you is the perspective of my investment fund, which is that what we look for in this type of economy is we look for experience and we look for investor exits, right? So if you have previously delivered investor exits and you've professionally managed and executed software development, you know, those are extremely vital and necessary functions. So from our perspective, you know, this market definitely favors, you know, some gray hair and, you know, some battle scars, but without question, like, you need to see wins. You need to see past victories, or else it becomes hard to imagine how they're going to succeed again this time.
Okay. So as you might imagine, cryptocurrencies might be a little bit risky for e-commerce websites for the merchants because they are generally volatile. We are planning to solve this fluctuation problem and fiat currency conversion with stable cryptocurrency called MenaCash. I wonder your opinion about stablecoins.
So broadly speaking, my opinion about a stable coin is that a stable coin is a subclass of an asset-backed coin. And essentially, there's only two kinds of stable coins. You know, one of them is a variant of the other, right? Which is, one of them is essentially the 100% reserve ratio, right? And that is the most trustworthy And then there's something with an algorithmic reserve ratio that's less than 100% asset-backed, right? So when you look at stable coins, obviously the stability is related to the utility because of the 10,000. I don't know if you remember this, but at one point in the history of Bitcoin, someone purchased 2 pizzas for 10,000 Bitcoins.
Yes.
So, you know, in today's terms, it's something like maybe 60 million USD or something. I always like to say they got 2 pizzas, which makes each pizza 30 million USD, but you know, it's still not that great of a deal. But the point is that nobody wants to suffer from this problem. So stability is important in terms of the functional utility of money, you know, as a spending money. So I think that is important.
Yeah, also in that sense, we are using USD in order to back the stable cryptocurrency in the bank account. Okay.
You know, a final note though is that stability in some ways is a bit problematic because no asset-backed currency can be more stable than the asset that is backing, right? So if you peg to USD, right, the value of USD may decrease, right? So and it's actually known to decrease. So that's you know, I mean, obviously it's imperfect. The world is an imperfect world, but you know, I do think people want to have something that they can rely on.
Yeah,
for sure.
That's true. We are designing MenaPay according to the Islamic Finance requirements. Were you interested in Islamic Finance compliance until you meet us?
It's interestingly yes, which is I met a gentleman in Dubai, and I saw him again recently in Spain, and he wanted to invite me to the largest blockchain conference in Pakistan. And so one of the themes was to talk about the idea of essentially like Sharia compliant financial services. I actually asked that my co-founder, who's Turkish, actually take my place because he has a much deeper understanding of the principles. But from my perspective, I actually asked kind of a typical investor question, right? Which is, why would you have your own stable coin when there are other stable coins? In fact, there are many, right? And to me, the answer that this is compatible, this stable coin is provably compatible with Islamic financial regulation and law, like that's a great answer. Like I've yet to see any coin with this approval. So, you know, that is a differentiating coin, and for the region, it's probably a necessity. So, you know, I think it's a good idea.
Okay. I know you invest in ICOs, new blockchain projects. On the other hand, there are lots of positive and negative discussions on this.
Yes.
As we are now with the private group, in the private meeting, I'd like to hear your honest opinion and how do you decide investing in ICOs?
So, I continue to invest out of my fund. And, you know, we are professional investors, which means that we have limited partners. Most of the limited partners are banks, and so we're working with traditional asset allocation. Because we're working with traditional professional asset allocators, our job as professional investors is to deploy risk capital, right? So from our perspective, as investors, we're not as subject to market timing because we believe that deployment of capital in risk asset classes is very much still very deeply a thing, right? So I'll tell you what is not a thing. What is not a thing is throwing ether from non-professionals into everything. Like that, we went through a huge phase where lots of random people were throwing ether at lots of random ICOs without very much specialized knowledge. This is not recommended, I think. To me, what is recommended is really swinging the pendulum back to professional diligence, right? Professional venture class investors. I think when you see professional investment in investors, it may then become safer to follow those investors. But if you're following those investors, you should be on the same terms. Whatever they're getting, you should be getting. Otherwise, you're not truly following. So to me, these are some of the essential principles that I think govern the time that we're in, right? Because when you really experience the dot-com boom, there's two things that you observe. The first thing you observe is 99% of the companies essentially don't exist in 5 years, right? So that's true. So when you pick a specific company, you think, well, okay, this company may not exist, but that may not be a problem. And the reason why it may not be a problem is companies, even companies that disappeared in .com, like, let's say, for example, there was a search engine called Excite, right?
Never heard.
Never heard of it,
Never
right?
heard.
Yeah. So here's the thing, is it eventually got sold to a publicly traded company. Every one of the early investors and founders did really well, and the company no longer exists, right? So the point that I would make is that when you only look at the .com result, like you look at Google, you think, well, whoever invested in Google, like Andy Bechtolsheim, who wrote the first $100,000 check, right? Or if you look at Facebook, Peter Thiel, who wrote the first check, right? Of course those people are astronomically successful. But the thing that's amazing is that Google is actually made up of thousands of companies that were acquired and rolled up into Google. So even though you may not even remember the names of some of these companies that didn't necessarily become Google, like a lot of the early investors in a lot of those companies that you don't even know the names of did really well. Right? And so from our perspective as professional asset allocators, you need to not obsess about timing the market. You should just professionally deploy, right, based on core principles of diligence, and then you should expect that there will be one unicorn that will return the totality of the fund. So that's really a mindset.
Okay. As also Barish mentioned in his presentation, more than 80% of Middle East region is unbanked. Do you think that this will push the adoption of cryptocurrency faster, as there are many people excited about making their first online purchase and having a secure place to store their financial assets without actually having to hide them or carry them?
So it's difficult for me to specifically comment on consumer behavior here, but what I can say is that decentralized cryptocurrencies coupled with things like mobile applications really have a huge potential to address the fastest growing segment of financial services, right? And the thing that's amazing is when you look at the tier of people who are unbanked, that's probably the fastest growing, not just in terms of total number, but also in terms of economic potential, right? So if you look at something like Goldman Sachs, increasing Goldman Sachs by a factor of 10 is impossible. Whereas increasing a lot of underbanked people by a factor of 10, it's actually much easier. So I think that's going to be an engine for creating a much more resilient and inclusive financial infrastructure.
Yeah, and also it's interesting, even though the unbanked population rate is around 80%, also smartphone usage is around 90%. So these people are also very familiar with the technology, mobile applications. So I believe if we can introduce the financial system in the mobile applications, just like you mentioned, it might have the traction.
I think, to me, a couple of the themes that emerge in this region that I think are very interesting. I think the technology penetration is high. The other thing that's very potent in the region is youth culture, right? Which is that when you look at the population of people, under the age of 30, it's actually a fairly sizable population of people, right? And when you look at the millennial demographic, the trust in banks is actually not that high, right? So I think in a way there is an opportunity to kind of create this shift, because I do believe that there's something happening between traditional financial services and cryptographic financial services that's generational, that applies to the younger generation.
Yeah. Also, as Her Highness mentioned, trust is the key factor.
Trust is the key factor, no question.
What do you think about involving key opinion leaders in the MENA region for cryptocurrency enterprises to create bridge between Middle East and blockchain community in general?
My friend Paul, who's a general partner at a fund called Pantera, which is a very prodigious investor in the blockchain space, has kind of a personal thesis about this kind of connection between technology investment from Silicon Valley and like regional super investment. So to me, like, there's a power combination now, which includes sort of Silicon Valley as a function of diligence and technology, right? But at the same time, you know, the need for kind of very strong regional players is kind of unprecedented in this new decentralized economy. So I feel like what's happening now is much more decentralized and much more culturally driven. And I think the thing that's impressive is, you know, you can go to any region and you'll find that there are incredibly influential people in every region, right? So I do feel like at the moment you need to create alliances between kind of the people who represent the power of the region, and then between the people that represent the technology. So I think that those bridging those distant relationships creates a completely new fabric. So I think probably one of the hallmark examples is Masayoshi Son, who is the chairman of SoftBank, has created a tremendous thing with the Vision Fund and Technology Fund. You know, of course, with the Kingdom of Saudi Arabia, that this joint venture is likely to eliminate the U.S. tech IPO, right? So instead of going IPO, all companies will essentially just go to SoftBank, and the end game is that this SoftBank Vision Fund and its successor will effectively own all of the largest technology companies in the world. So to me, like, that intersection between like a regional superpower and a technology superpower is like that's the new game, the new planetary game. So I think that's exciting. It's exciting to see.
Yeah, as you mentioned, this power of region. Different regions has different needs, requirements, and habits. That's why lately some blockchain projects they would like to focus in single regions. So what do you think about the projects who are focusing on a specific region?
I think it's extremely powerful because ultimately, you know, the thing that, like, we're all creatures of our culture. So to me, like, having access to culture means access to markets. So, you know, the idea of having regional cryptocurrency efforts, I think it's a natural for us.
Okay. I also remember in some of your interviews, you mentioned that you are not a kind of social media person, but you are more interested in social economy. We already mentioned in the presentation that we are sharing 75% of the revenue of MenaPay with the token holders. What do you think, how this might affect the token price?
Yeah, so I definitely tend to steer away from talking that much about token prices because token prices are often affected by all kinds of things, including speculation. But what I can say is I can speak to token value, right? So to me, you know, tokens that have mechanics that incentivize positive user behavior tend to do better, right? So, you know, from the perspective of creating correct incentives, I think that mechanic is valuable. I think a similar mechanic is what Binance uses, which is basically a deflationary token burn. So they basically take revenues and a fraction of revenue they use to like exit tokens from the market, and this creates deflation. So very, very powerful mechanic.
Yeah, also it might push the price.
Pushes the price, yes.
MenaPay is bringing a whole new concept to blockchain world. We call it green mining. So in order to incentivize our loyal users, we are automatically rewarding users with MenaPay tokens when they do peer-to-peer or peer-to-merchant transactions. I would like to hear your opinion about such sharing economy practices.
Yeah, so for me, one of the things that is really essential in all of this is understanding kind of human behavior. So if you actually look at the deep roots of the crypto asset revolution in Bitcoin, one of the things that people don't always understand is they don't always understand that there's 3 layers of innovation, blockchain being the most trivial, which is blockchain is basically cryptographic immutability of the data system, right? Which is not that interesting. The thing that's the most interesting is consensus, which is how do you know that the information in the ledger is true, right? But above consensus is actually incentives, right? So from my perspective, in order to create a powerful community, which is what you need to create an economy, you need to have incentives for positive behavior, right? The 2 things you need to do that Satoshi taught are you need to eliminate economic free riders. So anyone who's able to steal money from the group needs to be blocked, typically through cryptography. But then once you've sealed it from attack, then the next thing you need to do is you need to incentivize people who are adding value, right? And for example, things like miners, right? So if you look at a mining mechanic, Satoshi created a reward for essentially helping to use compute power to secure the network, right? So to me, if you've blocked people from stealing energy and you reward people for bringing energy, then the energy can only go up, right? So I think that's the deep lesson of Bitcoin and of incentives. So I feel like having a mining incentive for your users is really just a way of extending that philosophy and creating a more rewarding token or economy. And just to make a fine point is open source software is technology driven by consent. And so the reason why it's very important is every open source package lives and dies on the basis of consent. And so the way it obtains consent is by being the most useful, right, the most convenient, the fastest, the most secure. So it's really just trying to be the best, right? So in that sense, the most rewarding system will get the most users, right? So I think that's the lesson of open source.
Yeah, and in that sense, the positive behavior in payment world, when they do the purchases with our payment system. So this is why we are trying to, and we call this mining for MenaPay. This is why we are incentivizing this behavior.
Correct. And if you can make the most rewarding system, then you will get the most users. It's that simple.
And we are not only developing a payment system, but also we are trying to establish a blockchain ecosystem in the Middle East region. So what would your advice be to the government, regulators, press, startups and developers? What actions should be taken in order to grow a healthy ecosystem in the region?
I think that really from a regulatory perspective, I am a moderate. And so if you consult the typical crypto libertarian or even crypto anarchist early adopters, they tend to be anti-government, anti-regulation, right? So from my perspective, one of the aspects of regulation that is mandatory from a worldwide perspective is anti-money laundering, right? So anti-money laundering is just the baseline for all products and anywhere. So I would recommend that all developers, all product developers, all governments, all regulators, that they all truly understand the purpose of anti-money laundering regulation and they follow it, right? The thing that I think is also extremely important is for them to understand the basic principles of public key cryptography. And I think that's something that is painfully lacking in the industry, right? So when you look at regulations, the regulators don't even understand public key cryptography. And so for example, things like custody are largely unregulated and they're poorly understood. So, for me, from my perspective, I feel like the idea of regulation has to be driven by, informative knowledge about the key principles of public key cryptography. So that would be my advice, and that would hold for everyone, whether you're a developer, like whoever you are. If you're an investor, just understand the basic principles of cryptography. It will serve you well.
So thank you very much again for coming.
Oh yeah, great pleasure. Thank you.